Welcome, everyone, to this October 8th version of the Swing Trading Floor, where our mission is to enrich lives. My name is Brad Reed, and I am a real-life trader. I would like to encourage you to be good, and by good, I mean get out of debt, achieve your financial dreams, and give generously to your community. What's going on, everyone? You guys are cracking me up in the chat pane. You guys are pretty funny. Welcome to everyone who's not been here before. Welcome to all the new folks. You guys rock. If you don't mind, hit that button in your chat pane and change it from all panelists to all panelists and attendees. That would be super duper and awesome. Have a long list of stocks to look at, but Benjamin's going to remind me to make a comment about how to reduce your brokerage fees. Actually, why don't we just do that now, right? Benjamin says, call them. Yeah. I have done this with some brokers in the past, and I know many brokers here have called your brokers and just said, hey, look, some of my trading friends trade with Interactive Brokers, and they charge this much. Other folks are charging $4.95. So if you're charging me $9.95 or $6.95 or anything like that, that's just craziness. And you need to lower my fees or else I'm going to leave, because there are a gazillion brokers out there. And if Robert says, I tell my Thinkorswim friends that Brad keeps sending me referral codes for IB for free trades and reduced commissions if I move over. Actually, no, I sent you once, Robert. So if they're hitting you up, that's Interactive Brokers, not me. But at any rate, it doesn't, oh, you tell Thinkorswim that, yeah. It doesn't hurt to ask. A lot of times if you do ask, these people know that there are less expensive brokers out there. And if you think about how many trades you do in a year, just for kicks, let's look at day trades. Number of trades, 397. So far this year, we did 573 last year, 443 in 2016, 622 in 2015. If you can save $2 a trade, or maybe you go from $9.95 down to $4.95, or maybe you're one of those Scott Trade and E-Trade traders that are paying $9.95, and you go down to Interactive Brokers, which charge like $2 or $3. You can save $2,000 or $3,000 a year, depending on how many trades. And this is just day trades, right? You throw in swing trades. You can see here 138 swing trades so far this month, a year 142 last year. You guys can do the math, but there are hundreds and hundreds, if not thousands and thousands of dollars to be saved by lowering your fees. So thanks, Benjamin, for that. At Angie Barbosa, 1 FTP for at Benjamin Jane for reminding me and helping me to inform folks that they can save thousands of dollars a year if they call their broker and just ask for a lower rate. Rock and roll, Benjamin. Joseph says, I'm calling TD Ameritrade tomorrow. There you go. Benjamin says, TD Ameritrade said $4.95 was the best they could do. And Benjamin said, I also asked for $1 per contract for options. Says it took 15 minutes. Very cool. Thanks, Benjamin. All right, let's talk about the markets. SPY had a bit of a bullish candle with a long lower wick. And what do I see that I love so much is that bit of a bullish volume spike right there. That's pretty cool. So, of course, the magic question is, do we bounce here? Benjamin says, buy the dip. And I had a lot of questions. Is this the dip? I don't know. When I look at dips we had in the past, it was a little bit more like that, kind of like that, kind of like that. We might V-bottom here. I say V-bottom here. We're not here. We might V-bottom here. But to be honest, I kind of think we come up into this area and go sideways for a little bit. I think we chop around in here for a little bit before it is determined. I was talking to Latoya and I was asking her, what do you think the market's going to do? And she was very nice, but let me kind of shorten our maybe 15-minute conversation. She doesn't care, right? And I think that's the magic of trading. You need to, it doesn't matter what the market's going to do. Market's going to do what it's going to do. It's how you react. So the point is, it doesn't really matter what we predict the market's going to do. What matters is how you are going to react. But if I am predicting, we come up here, go sideways, and come down one more time. I really think there is a buying zone somewhere off of these, that pivot area, or off the daily 100 simple moving average like we did there. I think we come down one more time. And when I turn on the stochastics and RSI, I see how looks like we did make a lower low. And so what I would like to see us do is come back up and do something like that. And I think in order for the stochastics to do that, the stock has to come up, go sideways, and then maybe come back down, which would be right about where that daily 100 simple moving average is right now. But I will be looking for that, and then I think that would be pretty conclusively the dip there. Several people asking me if you want to buy the dip now. I have no problems with that. If you want to do an entry there and a protective stop there, just risk an R. And if we do go up, raise your protective stop wherever you want to do it, so you lose less than an R if it does do one of these. But if you buy all of these dips and you get stopped out, and you do it again down here, and you get stopped out, eventually you're going to be right, and you are going to have a huge win. I do not think that this is the end of the bearish market, but my plan for the end of the bearish market is to come down here, get underneath the daily 200 simple moving average, and either do some flavor of a head and shoulders, maybe some big kind of massive double top, and not until then will I be considering going bearish and like long-term bearish, like move my wife's 401k into bearish positions or defensive positions or cash or whatever it is. But folks, here's the thing. If you think that this might be the top, you need to come up with your plan now on what you're going to do. You know, I think I used the expression last Friday, or the analogy, you know, when a tornado is bearing down on your house, that is not the time to come up with a plan. If your house catches on fire, that's not the time to come up with a plan on how to get everyone out safely. Time is now. Come up with your plan on what signals you're going to look for and how you're going to react to them. And if you don't know, back trade, right? Get some data on your chart, go back in history, and then just go day by day or week by week. What would I be doing here? What would I be doing here? What entry criteria would I be looking for? What protective stop criteria would I be looking for? All that kind of stuff. Practice, practice, practice. Robert says, we did close above the 50 EMA on the daily and the 10 EMA on the weekly. Ooh, let's take a look at that. There's the weekly chart. Yes, that is a close above the 10 moving average on the daily. So I would not be surprised if this is the bullish bounce, but I also would not be surprised if we come down a little bit more. Folks, there's a lot of time left in October. There are a lot of earnings announcements coming up. A lot of the stocks that we've been looking at for the last week is, hey, this looks pretty nice, but earnings are coming up. So let's wait till after earnings. And if we're thinking that, there's probably a lot of other professional traders who are also thinking, hey, maybe I'm going to wait till after earnings. And if a lot of people are thinking wait, that usually is sideways to a little bit bearish in the market. So I think, again, something like this, of course, there's no way it's that clean. It's going to be messy and poppy and something like that. But I think somewhere around early November, maybe even late October, we look for some sort of bottoming pattern. We look for the bullish divergence on the stochastics, and I think that'll be the dip before we go into the Santa rally. Santa rally meaning the Christmas push that we typically see in the stock market through November and December. And then I think somewhere around, pardon me, somewhere around the March to May timeframe is when we look for a potential next into the bullish market. But all of this is, again, a lot of predicting. And really the thing is that what you want to say is, hey, look, if this comes back up and down to the 100, I'm going to look for a buy signal there. And if you see it, you react. So again, don't predict. Don't make money in the stock market by guessing as to what it's going to do. You make a plan. If tomorrow we get a bearish candle on small volume, and then on Wednesday I get another bullish candle on big volume, that's enough for me. I'm going to buy. Buy there, stop there, target one there, and let it run from there. Or for whatever your plan is, make your plan now. Groovy, let's check out the DIA. Once again, a bullish looking candle on fairly big volume. We are making lower lows though. Again, I see something around in this as the buying area, or the kind of the Fibonacci-ish retrace zone that we should be looking for. Could this be the bullish bounce? Yes, it could. Or we might come down some more. And once again, I think if we wiggle and we come down again, there's a chance that the DIA or the stochastics here can do something like that. That'll be our sign for bullish divergence, and we will buy it. Something like that. That's what we're looking for. All right. So DIA pretty much confirms the same as the SPY. Let's take a look at the Qs. All right, QQQs had a doji, which is not nearly as bullish as the others. So again, we can wiggle in here, and maybe we come down to the daily 200, which we would catch kind of right up in this area. That just seems like a great zone for us to do our bounce. Time-wise, it makes sense. The size of that pullback makes sense. And that's what I'm going to be looking for. Benjamin says, might be looking for a Morningstar reversal in order to go more bullish on the Qs or on the overall market. I agree, sir. Oh, I wanted to take a look at the stochastics and the RSI for the Qs. What in the world? Sorry, I just, oh man, it started already. No. I was like lower lows, man. I was not expecting for us to be way up here, there, and the stock to be way down there. I expected something a whole lot more like that. That, whew, curveball. But if the Qs turn around here, that would make for the bullish divergence that we've been looking for. I'd be really surprised. I think that needs to rest a little bit more. But still, we are, the only way we do not create bullish divergence is if this thing comes all the way down to there or lower very quickly. Benjamin says, RSI hasn't gotten oversold since March. This is true. RSI is super low. Very interesting. All right, well, we will watch the Qs and see what happens. And IWM. Now, I got a question. I wanted to say it was from Ash on what to do with the IWM. There it is. Holding at this level. Need suggestion if I should wait, start, if I should wait or start an order at 161 or 161 and a half for IWM in a good small position. So what did we get on the IWM? We got a indecision doji with a very small bullish body. We got it on pretty low volume though, Ash. That may be a little bit more of a concern. If you have a small position and you want to do a buy there, or maybe even a buy limit there, I think I would encourage you to have a little bit of a lower stop, like somewhere down in this area for your protective stop. If you want to try and sneak it right in there, I think there is a very good chance that we retrace back up into the 10 moving average, maybe back into one of these two old resistances to see if there'll be a new support. So somewhere up in this range before we roll over, if we roll over, and so that should give you a chance to get your stop to break even. But I think if someone was asking me that they want to do a trade like that, I would probably suggest a pretty wide protective stop, something like that. Benjamin's saying if you can target that 165 area and get 2R, I like it to go bullish. So what Benjamin is saying is that he's saying, yeah, if you can get 2R by there, that's a pretty decent trade. Now, Ash, one thing that you could do is buy an option that maybe expires in December and go bullish with an absolute zero value play, which means if your risk is $500, look to see if there's an option you can buy with the strike somewhere in this range for $5. And then that way, if you're wrong and it keeps coming down, the worst thing that it can do is expire worthless and you lose 1R. But if you are right and it continues on up, then that $5 option is going to be worth 5, 10, 15, 20 bucks. And yeah, you can double up, maybe even triple up. If your risk is $2 like mine, if your risk is $200, then you're looking for an option at around $2. But again, I like that December expiration. So if you are wondering if this is the dip and you want to get in, you can also always get in with an option that costs no more than 1R for you to get into. And that's one way where even if you're wrong and it comes down here, you won't get stopped out and you can wait to see if it comes back and gives you a rocking pattern like that. Let's take a look at Stokes and RSI for the Russell. So it looks like RSI, or excuse me, the stochastics have come back to their regular spots. So I'm not going to be catching any bullish divergence here, but you know, if we start getting something like that while it's making lower lows, then I'll be considering that for the bounce. Now, granted, over here it was making higher lows, so that would be as expected. But if we get these kind of higher lows over here while the stock is making lower lows, then that is the sign I will be looking for either a bullish play or a non-directional play. Questions, thoughts, additional views, opposing views are welcome as well on the overall markets. Type them in. Otherwise, I'm going to go talk about some of the credit spreads we have. We don't have any official swing trades. Kind of like I said earlier, we have a bunch of earnings announcements coming up. So it's just like every time we see one that's got a good setup, the earnings coming up in 2 or 3 weeks kind of ruin it. DDD naked put expires in about a week or two. Trade your plan. I think Matt DeLong's plan is if you can get 50% of the value of that profit, go ahead and buy to close. And I'm kind of thinking you might be getting that here on DDD. One exception is that on the current swing trades, you only got 14 cents. So it's not like it's not like the Tesla where you got $1.40 and you can close it out and put $70 per contract in your pocket. This would be what, $7 per contract if you were to close it out. So just trade your plan, whatever your plan says to do. Tesla moving lower. I got a question today. Brad, is it going to break that 244 support zone? I think it'll balance and or wiggle a little bit. You know, when it came running in through here, it went sideways a little bit before it bounced. When it came charging down here, it wiggled a little bit before it bounced. This was straight up a V bottom. But I think we get a little wiggle if it's going to break through that. There's a great chance we are in just a giant channel here on Tesla, where those are the buy zones and this is the sell zone up here. Right? Something like that. And you buy the bounce, you sell the resistance, you buy the bounce, you sell the resistance, you buy the bounce, you sell the resistance. However you want to trade it. But yeah, as far as the Tesla put, let's close it out for a 50% profit if we can. Some folks have already done that. Some folks are still waiting for an opportunity. Some folks are waiting for 80% profit. Some are like, screw it. If I can get Tesla stock at $100, I'm buying it. Groovy. Questions, thoughts, opposing views. I don't see any discussion there, so let's keep on going. Skechers, gorgeous candle today. Earnings coming up in less than 2 weeks, so I did not make this official. I did not do this in my account. Now, if I did get triggered in on this, I don't like today's candle because today's candle was a bullish candle on increased volume. But I still think bearish should be the way to go. If I did not get triggered on it, on this one down here, I like it even more now because now there are more buyers that are going to be trapped if it does roll over. Once again, I am not trading this. It does not meet with my trading plan because earnings are coming up in just about 2 or 3 weeks, and I really want 5 or 6 weeks for a stock trade to play out. Benjamin saying, if you are still bearish on this, you might even consider a sell limit there with the protective stop up here to see if it'll go down. That's Benjamin's plan. The volume coming in today, this bullish volume, would have me wait on that one. But the reason the stock market works is because we have different trading plans, right? If we all had the same trading plan, we'd all be buying at the same spot and all be selling at the same spot, and the market would not work. I don't really see anything that is surprising here. So I will just, Bollinger, should we get into the bottom band? We did get into the bottom band. Love that 20 moving average is about where the stop is. I'm still more bearish than bullish. Benjamin is still more bearish than bullish. So we're thinking the same thing. Again, not an official trade, but if you want to, that's how I would be trading it. And granted, the reason I'm not is because earnings are coming up very soon. And sometimes, in my opinion, stocks tend to fall asleep right before earnings. That one did not. Last time it had earnings, it did not fall asleep right before. And by fall asleep, I mean the volume drops out. Everyone just keeps kind of waiting for this one. EA would have been an official trade if I had got a bullish candle in one of those two, but I did not. it did roll down into the target area. So I would have exited 20% today, and I would be lowering the stop probably to 1 penny below break even. So the high of this doji on Friday was 115.75. So I think, oops, not that one. So let me put that at 115.81. And if I was in it, and I'm not because earnings are coming up, that would be where I'd exit the rest. Shake Shack. Again, earnings coming up in 27 days. But once again, a gorgeous, gorgeous candle. If we had time on this one, I would definitely make this official. And I'd also do half an hour entry there. So I would calculate what I would need for a half an hour risk with the entry at 63.71 and stop at 59.89. But I would also figure out what it would be for half an hour of risk with an entry at 62.12 and a protective stop at 59.89. So just a way to sort of get in a little bit early, but not risk too much on a slightly aggressive entry. Again, the bullish volume down here is just crushing it. This is a very classic shape of something that broke out through this. That's a weird looking double bottom. So I wouldn't quite call it a double bottom, but whatever it is, it broke out of an old resistance and making a perfect example of a classic retest. Don says, could you make your candle size a little larger? Sure, John. Don, let me just zoom in. Is that what you're talking about? And of course, Don, yeah, I'll try and zoom in and get everything a little bit bigger on the screen. I sometimes forget that not everyone is watching on like a 30-inch monitor. So I apologize. Yes, I will zoom in. Let's take a look at Bollinger's. Yeah, pulling into the midline. Oh man, I love that. Stochastics and RSI are pulling back. They look absolutely terrific, ready to continue bullish. Benjamin says, purdy. Yup, I like that. But earnings are coming up, so make sure that meets your plan. For me, that's about where the 2-hour target would be. And if it goes at that rate to get up there, that is over earnings. And that's why I'm waiting. Next is Netflix. Yates says, I have a 65.50 October covered call on Shake Shack. 65.50, right in there. Love it, man. Because you might get paid to sell at a profit, or kind of like I was saying, this thing will probably take a while to get up there. It's hard to lose with the covered call. Netflix, love that volume there. Let's see if Netflix can go sideways until earnings. Let that 200 simple moving average come in, and then we will buy the salsa with an entry somewhere around there. Protective stop somewhere in this area. I'm thinking more like an absolute zero trade with an option. Benjamin says Netflix is so tricky. I think it backtests the rising wedge, then falls personally. All right. So Benjamin is saying that he thinks that it may come up and do something like that, and that's fine. Either way, I'm waiting until then for the earliest opportunity. And shoot, Benjamin, if it does exactly that, and it's up in there on earnings and it's starting to look bearish, I can buy a put and look to exit that put into the daily 200 simple moving average. If anyone says, you got it. CVNA was something I was looking at a while back. Something like that. First target area was hit today. Second target area, something like that. And again, that's just not the reward risk I wanted to take. And earnings coming up pretty soon. If you did take that trade, I think it'd be prudent to lower your stop to just above that this resistance over here and below the entry. Take some at your target, take some at the second target, and if you want to see just how fast it can go down before earnings, trade your plan. So I think early November is when earnings are, somewhere around in this area. Either way, I'm waiting, didn't like the reward risk. However, I did take this trade on MU, which is going nicely in my favor. I think tomorrow morning, if we get any more kind of bearishness, I will lower the stop. If you look at the option chart, there is a there is a support at about $1 and another one at about $2. So depending on what we do tomorrow will determine how I will, how aggressively I will move the stop. If this thing just goes careening straight into the target area, with as much time that is on that option, I'll be lucky to get it, lucky to get an R on that. But if it wants to go up and over one more time, kind of like what we're expecting the overall market to do, then I'll probably get an R.5, 2R on that one. But at this point, not going to do much. But yeah, I will likely adjust my stop on that one tomorrow. FedEx was another one that I had drawn but did not take because of earnings coming up. But someone is telling me that they were in it. So I think it's pretty safe to lower that stop down to like a 245.02 area. 245.02 if you are in it. Take about half an hour off the table. Look to start taking profits up in this area. And when I was setting up these targets, I realized, man, bum, 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 bum. That looks so Fibonacci-ish. Joseph said, I exited 85% on MU for a nice win. Very nice, very nice. Nia says, earnings were early September. Yes, earnings are done. Earnings are done. I was trying to decide, I was trying to choose between FedEx and MU, and I chose MU because FedEx had some wonky options. I could only find 240 strike or 230 strike, and the open interest really wasn't that great, whereas MU had a lot more choices for option and a lot more open interest. Joseph says, going to have to learn about R's. Well, it's in a couple of videos, so go check it out. If you needed anything specific, Joseph, feel free to email me. And this goes for anyone. My email address is brad@reallifetrading.com. If there's a video you're looking for or a question you have, I'd be happy to help you out. My cell phone in the United States of America is area code 512-296-8403. Call me anytime. If I'm with my family and I can't talk, I'll let it go to voicemail and I'll return your call later. If I have a do not disturb on my phone, so if I'm sleeping, you know, if it's early in the morning where you are and it's late at night where I'm at, again, it'll just go to voicemail. So hit me up. I know plenty of y'all have Jeremy Newsom's information. He's going to be gone traveling for another week or so. He promised his, I think his niece and his brother a trip, and he's not going to be as wild as adventurous as they are because of his sickness last week, but he went on the trip. I was kind of surprised, but glad he's feeling good enough to go. And we are going to crush it and make him so sorry he didn't trade with us. All right, so I put my email address and cell phone number in the chat pane. Here we go. Questions, thoughts, opposing views on FedEx, go ahead and type them in. I forgot who it was. Someone told me that they took my Red Hat trade. I did not get filled because I wanted that upper wick to come up a little bit higher before I went bearish. This was the weekly options newsletter last week. Just didn't get filled, but it did come into the target. If I did get filled, I would be taking, honestly, I'd be taking all right there. But I drew a target 1 there, a target 2 there, and a target 3 right in through there. So if any of those targets look yummy to you, go ahead and do it. I would also, if I were in it, say, I'm not gonna lose. Yeah, I'd say the highest that my stop would be 131.11. But if you want to say, man, we're in a strong support area, this thing's very extended, and you wanted to drop your stop all the way to 126.62, I would not argue with that whatsoever. The post-market activity looks more bearish than bullish. If it were my trade, I'd have that stop there, and I would have taken at least 50% there. And here's one reason why I'd be taking so much, maybe all, is that the potential for more reward is that, but the potential for loss is all the way up there. So if you did not take profits, right now the reward risk is not in your favor. The reward risk would not be in your favor. So you've got a couple of ways to rectify that. You can take some off the table tomorrow at your profit, or you can, instead of have your stop up there, drop your stop down there, and therefore your risk reward becomes much, much more favorable. But realize we concentrate a lot on reward risk before we get into a trade. Doesn't mean we stop thinking about reward risk, right? Always be thinking about reward risk. What is the reward that I get if it continues? What is the risk that I have if I lose? And yes, whoever just tested, I think that was you, Joseph, that is my cell phone. It works. All right, those are some of the trades. Let's see. I think I have Merchant Monday stocks up here, and these are requests. So let's do requests first. I'll work from the bottom up today. A lot of folks asking me, hey, Brad, is this the buy low opportunity on AMD? Joseph, it works, right? Yeah? Joseph says, LOL in the chat pane. I didn't put someone else's cell phone number. Don says that Joseph, test and verified. Yes, you guys heard it. Groovy. AMD, we are nicely oversold on both the stochastics and the RSI. Bollinger's, we got to be, we're a little bit outside that bottom band. There are a lot of people here that like putting orders in just above some of these expected supports, and they like getting filled on the way down, looking for a bounce somewhere in between their entry and their protective stop. Brian posted a neat thing, said, those are called swing traders. Momentum traders wait for the breakout. I would classify myself as more of a momentum trader. If I were to draw supports, something like that would look very Fibonacci-ish, right? 1, 2, 3, 4, 5. ABC craziness. we're ready to go again. But the question is, do we bounce there, or or over here? Where do we bounce? Again, only risk in R. If you want to take it there, I don't like all the bearish volume that's coming in. I think we go higher. I think we retrace, because I think there's a lot of people that are in this thing bearish that are profitable, but I don't know if we're going to do a V bottom and keep going. So what I would like to see is us come back for a retrace, maybe just up here into these moving averages, come back down, and then if we can make a higher low, you know, if we can do something like this right over there, you know, get a nice higher low, take that breakout. Where's some other candles? I mean, there's another higher low. That's just kind of what I'm waiting for. Again, higher lows. Benjamin says, I don't hate shorting a rip here either, but it's got to have a great reward risk. Yeah, so if it comes up here and wiggles, you could either short it to go back down into the 100, or you could then enter your buy limit, protective stop. It just depends on what the volume's doing, what the stochastics and RSI are doing, what the Bollingers are doing. So it's not in my plan to buy on this candle. I need a few more candles. I need that wiggle. You guys know, you know I like that wiggle. And then I would buy a breakout with a protective stop. And if I get a whoop-a-doop, then, and I get some nice bullish volume in through here. Ah, shoot, I just saw earnings. Well, forget all of what I just said. I'm waiting. I am waiting for earnings. All right, all of that. So if you do get in a trade, make sure it is nice and quick. If I am holding shares of AMD, probably gonna have a protective stop right about in there. Looks like a really neat support level on that big bullish candle, and with the 50 EMA in my favor, and all these bearish traders that are profitable, who hopefully also see that earnings are coming up and they'll be like, man, I can get a really nice profit. Shoot, I'm gonna buy to close and let it go on up. Questions, thoughts, opposing views on AMD? Accenture, moving on. Just had earnings. Woohoo! This is almost kind of what I want to see if I'm looking to buy the bounce. Oh, thank you so much. A really, really nice support zone right in through there. A strong, nice pivot right in through there. Earnings has already happened. Not enough for me to make it official yet, but I am going to move it up into my watch list on Accenture. If I get one of those tomorrow, I may make that an official trade to go bullish. The question is, do I go bullish there with a protective stop there, or do I enter something that's like a buy limit there with a protective stop down here? I kind of like that second setup. But right now, I am more bullish than bearish. Thank you, Joseph. Benjamin says, that double top on Accenture makes me nervous. I agree. That's why I want some bullish volume to come in, some bullish signals to come in, so we can determine, is this in fact a double top where we're going to go screaming bearish, or is this just kind of like a flag pattern, right? Are we going to get this? Is that that? And if so, I'm looking for that. Or is this the same thing as that? So only time will tell. But yeah, looking for a little bit more before I go bullish on that. Let's see what the stochastics and RSI will be telling me. They're saying, dude, that is some of the most incredible bearish divergence I have seen. Wow, that is steep. I was hoping that would be more kind of like that to demonstrate. I mean, sorry, I hope that was more like that to demonstrate bullish divergence. No, not quite seeing bullish divergence on here just yet. So that's a good warm tall glass of weight. Made it into the bottom band. Yeah, wait. See if it comes into there and then rolls down, or if it comes into there and boop. But I got it on my watch list. I will be carefully watching Accenture, but right now I will wait. Groovy. Let's see. I'm going to take AMD off my list, but if you have more questions, let me know and we will watch it. Visa, much like a lot of stocks, kind of crazy on the bearish tear into a nice moving average where there has been some support. Do we bounce here or do we not? Earnings coming up in 2 weeks, so if I'm not in right now, I'm definitely waiting. If I do have shares of Visa, I am going to have a protective stop somewhere up in this area, depending on just how long-term you are. Hopefully on one of these two candles over here, you were able to sell a covered call up in the 156, maybe even 165 area, depending on if you want to go short or over earnings, and you use that money to buy yourself a protective put underneath that area. I was talking with a trader the other day who had protective puts and was saying, what do I do with them? Well, there's really two things you can do with protective puts. You can sell them for a profit before they expire, or if you have a protective put there and the stock is down there, you can sell your shares for that price up there. You can exercise it and exit your shares if you think they're going to roll over. If you think they're going to roll over quickly, some people will just use a stop market of some sort to exit your position, but hold on to the put for it to go down because it will increase in value if the stock goes down. The whole thing about, that's why they're called options, is because you have lots and lots of choices. Benjamin says, Visa and MasterCard, be aware of how increased interest rates will affect their earnings. They're getting sold off now, but credit card companies make money when yields get bigger because there is usually a larger, for credit cards at least, there is a larger variance between the where they borrow money at and where they get paid at. Also, as interest rates go up, fewer people want to get loans from banks, and they'll go take out a loan on their 0% interest credit card and then forget to make a payment, and then they get to pay 15, 20, or 30% interest all the way back for all of those months. It's a trap. Whenever I think of a bank, I think of one of those skyscrapers down on Wall Street, and I don't think of a business that is that's in it for me, right? Right? They make money for themselves, and they make a lot of money off of credit cards. So yeah, just watch out. Cool. Visa. If I'm not in it, I'm waiting. If I am in it, I'm going to have a protective stop and look for a collar opportunity. MasterCard, I'm assuming is going to look about the same. Yep, long lower wick there on the 100. Earnings coming up very, very soon. If I'm not in it, I'm waiting. If I am in it, protective stop, nice and tight, somewhere in this range, just depending on how long-term you want to be. American Express. A little bit more bullish than bearish on some of those, a little bit more bullish than Visa or MasterCard with that bullish bottom candle. Let's see if we can get a higher low, and then we might be looking to buy. Did I say a higher low? That would be a higher high. Let's see if we can get a higher high, and then I might be a little bit more enthused to buy the salsa, buy the dip, if it dips back down somewhere in this area. Again, earnings coming up very, very soon. Now, one thing to consider is that the earnings reports on American Express, Visa, and MasterCard are going to be very, very similar. So American Express has earnings in 10 days, Visa has in 16 days, and MasterCard has in 22 days. So if we learn something on American Express, we can test it on Visa, and then we can crush it on MasterCard because they happen in that order. Benjamin says, watch out for Head and Shoulders. Yep, we'll watch out for that. But during this Santa rally, people like to use their credit cards. Benjamin says, they sure do. All right, Shopify. Down on that daily 200 simple moving average. Earnings coming up, so if you're not in it, I would have to wait. If you message me and says, hey, Brad, this looks like a great buy opportunity, I would be like, it sure does. I don't like the lower lows there, and I really don't like earnings coming up here because there's a great chance that you buy and it wiggles and it may give you something, and then over earnings it goes kablam, and you are stuck. Realize, folks, that if you have a protective stop there and it gaps over earnings and opens down there, you don't get filled there, right? Even if that's your protective stop, if it gaps overnight, you get filled there. Yeah, Benjamin says, unless you bought puts, then you good. Yeah, if you buy a put, then you have the right to sell the stock at 130, even if the current market price is 100. Again, I am not forecasting or predicting Shopify to get absolutely wrecked and destroyed, but this looks like a very long bullish move. This looks like a nasty ABC, and I think earnings will give us a, I hope earnings gives us an answer on Shopify. To be honest, I would like for it to wiggle here between the 100 and 200, and on earnings have miraculous earnings, open up there, and we all make lots of money as it takes off again. But if I'm not in it, I'm waiting. If I am in it, a protective stop somewhere in this range. And yeah, look to buy puts over earnings, folks. Close that out. Grubhub. That looks like the Head and Shoulders just happened, and this is it playing out. Found support off the 100 there. Earnings coming up, so maybe an opportunity. Let's see if this thing can wiggle into earnings, maybe even make some flavor of an ascending triangle right there. And earnings, we get a cute little gap up into this resistance. And then we do a buy limit order right around in there. And we get something like that. That's a lot of ifs. That's a lot of ifs. But if I'm not in it, I'm waiting for earnings. If I am in it, I think a protective stop, again, somewhere in this area makes a lot of sense. You can buy puts to protect over earnings, but a lot of earnings coming up, folks. If we get even a little bit of a retrace on any of these stocks that you have shares on, wait for that retrace, then buy your puts because they'll be a lot cheaper. A lot cheaper. Nia says, got a bull put spread, 115, 105. I love that support. That looks great. Be aware that earnings are coming up, Nia. So if you need to close that out for a profit before earnings, that's fine. Also, whenever I do credit spreads, and it's been a while, I usually get better premiums if my strikes are close together. So like the 115, 110 rather than the 115, 105. So keep an eye out for that next time you're doing credit spreads. Rock and roll. PayPal is next. And Nia, I'm not saying that you messed it up or you did it wrong. I was not looking at the option change, and yes, sometimes there is better premiums when your strikes are apart. But just, I guess mainly for everyone else out there, because I know you do these types of trades all the time, you're experienced, you're a rock star. But anyone else who's investigating or learning about credit spreads, get those strikes close together. Nia says, in this case, yes. So Nia did look, and it was one of those rare times where the strike below, probably because of that 200 simple moving average, right? Probably because this one was above the daily 200. The market maker said this one is much safer, and so you got better premium on that spread. That would make sense. I can understand how the market maker would have done that. PayPal, very extended in the bearish direction, could be exhaustion volume. If you don't know what exhaustion volume is, let your kids stay up really late, and when they start going hyper and crazy around 9 or 10 o'clock, that's exhaustion volume. But yeah, this is sort of like the one last push, I would guess. Again, you don't trade based on guesses. You don't trade based on predictions. You react. But yeah, that looks like exhaustion volume to me. This parabolic shape, I would expect a ka-ching pretty quick, but may not be sustainable at all. Nia says, the market maker always has an upper hand. Yep, I agree, Nia. That doesn't mean they're bad people or bad computers, but they got their job as market makers because they manage risk like a boss. And that is pretty much the market maker's job, is just to manage risk. PayPal, earnings coming up very soon. Geez, if we could wiggle down in here and have some more bearish volume, and this sucker gaps up on earnings, oh, that gives me goosebumps. I would definitely do that. If we wiggle in here underneath that 200 simple moving average and we gap down when earnings happen, I will be buying puts. I will be buying puts. But just got to wait for now. If I am in it with shares, I'm losing my patience. Probably somewhere in that range for a protective stop, depending on how short-term or long-term someone may be. Benjamin says, seems like long-term a relatively safe buy. I think, yeah. PayPal's got a pretty good grip on that friendly, yeah, on that alternative money transfer system. 10 days until earnings. Groovy. 5 below. No, that's not it. But it's speeding up. Ooh, look at that bullish volume. Maybe a little bit of a wiggle here. And let these moving averages come down, and I may buy the bounce. The timing on that and the break there matches nicely with the timing on that and a break soon. I like this one a little bit. We'll move it up to our watch list. If I'm not in shares but want to be in, yeah, I'm waiting for a little bit of a wiggle, maybe some higher lows, maybe a double bottom, inverted head and shoulders with volume coming in. If I am a holder. I probably have my protective stop somewhere there to there. Bull put spread in the 100 range. I don't like the overall market. If I was a little bit more bullish on the overall markets, I might be tempted to do a bull put spread there. Otherwise, it's going to have to be down here, and I'm not going to get premiums there. Yeah, not gonna call that. So 5, I'll have it on the watch list. We'll see what it does. Goldman Sachs, again, has earnings coming up very, very soon. 8 days, 1 week away. It says noted post-market for 5. Ooh, a nice little gap up. Oh, man. Yeah, so that gap up may be what we're looking for. I'm not going to do a buy limit here, but if you wanted to have a buy limit somewhere there with your protective stop there, that makes a lot of sense. I would not argue with that one. Goldman Sachs earnings coming up soon. It did make some flavor of a head and shoulders here underneath that daily 200 simple moving average. Looks like a support level there. Because of earnings, I'm not getting in. I'm waiting for earnings to be done. Kind of a crusty, grumpy little support area there. If it does go bearish, man, I hope it goes bullish. I'll get those lines off of there. If on earnings we can gap maybe above there, would probably be the cleanest way to go bullish on it. Lots of congestion either way on Goldman Sachs. If I am holding shares, a protective stop there, time to buy your puts pretty soon. If I am not in, I am waiting. Dropbox just got dropped. Again, IPOs are tough to trade. We are into all-time lows. The only way I'd be buying Dropbox is if it comes back up into here and wiggles and then something good comes out of it. But there's just so many services that compete with this. They don't charge for most of their stuff. If you want to take a speculative put to go bearish, it's such a new company that it's going to have trouble finding shares to short to go down. I don't know. I'm staying away from this. If I am in it and I'm in bearish, I'm taking profits and or with very close protective stops. If I'm looking for an opportunity, I'm not. Nia says, good for day trade. I think you're going to have trouble shorting it. It's going to be on short sell restriction. Just doesn't meet my trading plan. So if you have questions about Dropbox that I did not answer, go ahead and hit me up in Slack at Brad Reed or email me, brad@reallifetrading.com, and I'll go over it. NVIDIA, let's see, trying to hit all these requests. I like the higher highs on NVIDIA. Does look like it's making higher lows. Does look like pretty weak volume on this pullback. Earnings are nice and far away. If you wanted to do a buy limit there with a protective stop, maybe down here, that's a pretty big entry to stop. So you would need a very, very big reward to make that worth it. So maybe you do something more of an absolute zero option play. But the indecision doji there with a higher low with bullish volume looking good there. I guess there's a chance that's exhaustion volume, and we might head and shoulder come back down and catch that 280. Yikes, I think that may be a little bit more likely. All right, so I'm going to wait and consider that a potential exhaustion volume. I would have much rather had that volume on that candle, but it did not come in on that candle. So I'm going to wait and see what we get. There's a chance that we do something like that. And then I think the buying zone is going to be somewhere in here. for NVIDIA. If I'm in shares, I'm going to have a nice tight protective stops and hope it keeps making the higher lows. And if I'm not in shares, I'm waiting before I get in. BABA extended in the bearish direction, just broke a fairly key support level here. Bounced at another support level, so we'll see what it does. Earnings are coming up in a month, so whatever you do, make it quick. I'm not going to day trade it or swing trade it until it rests a little bit. If I am in on this thing in a bullish direction, nice tight protective stop, lock in whatever I can before earnings. If I'm in it in a bearish position, again, earnings are coming up. It is extended in the bearish direction and in a buying zone. So again, I'll be exiting. And then the rest of these were merchant Monday stocks. Let's watch Coors for a potential double bottom. Watch out for earnings. But I would love Coors as a double bottom play there. If, earnings coming up on November 6th. That's a month. I can wait. I'll find stuff before then. Tiffany's, I'm in the speed round. Looks more, I don't like it. Just had earnings, so earnings not coming up for a while. Joseph says, before we leave tonight, got to check out PHM. I will do it. Tiffany's coming into a support area, so if you want to buy the bounce, something like that, that might be it. Stokes and RSI need to be down. They are not really. Well, we've got bullish divergence here. So that is what bullish divergence looks like. So this may be the buying opportunity somewhere in here on Tiffany's. Bollinger Bands in that bottom band. I don't know, folks. That may be. I'll take a look at that tomorrow for sure. I'm going a little bit long just because I'm not as good as Jeremy Newsom. American Eagle Outfitter, too big a bearish volume for me to try and take a position on now. Right there on that daily 200 simple moving average. Let's see if this thing can wiggle, maybe give us something like an inverted head and shoulders. We got an entry up there. But for now, I'm waiting. If I'm in it in the bearish direction, that is your target zone, time to take some profits. If I am in it in a bullish position, I'm not giving it much more room to go before I exit. Macy's, this was a great trade. A weekly options newsletter a week or two ago. If you have not exited, it is time to exit, as we might be looking for a bounce off that daily 200 simple moving average to take it back up. Like, I'm really might be considering that for a bounce. Where am I? There. Nike. I like the bullish volume. This one also might be a buy low opportunity. I don't like, not yet. A little bit more of a wiggle. And I want this 100 simple moving average coming in. And I want these moving averages coming down as well. But we'll put that on the watch list. PHM. Nia says, wait for a Morningstar reversal. Wait for some flavor of bullishness, yeah. We are really extended bearish on Pulte Group. Volume is terrific. That is a nice one white soldier. Volume's pretty bad. Earnings coming up very, very soon. 2 weeks away, so that's going to be a wait for me on PHM. So if you do decide to trade it and buy the bounce there, make it quick. Folks, you guys rock. Thanks for trading with me today. I will be with you again tomorrow, so feel free to send me your requests. Can't wait to trade with you again. I will see many of y'all on the morning floor in the morning on the day trading floor, 9 a.m. Eastern Time. And as always, trade on logic, not on hope. Have a good one.